Welcome to our weekly Forex market analysis call, and this is in preparation for the week of July 30th to August the 3rd, 2018. All right, so I'm currently on my vacation here, and let's see if my Wi-Fi and everything holds up, so please bear with me in case there are some disconnections, but looks good so far, so we'll just dive right in here. So before we get started, just a quick disclaimer. This is for educational purposes only. And trading is a risky business, especially in the summer months where there's a lot of volatility in the market, especially with all the different, like the trade situation and stuff like that, as well as low liquidity in the market. So please be careful with your money. Okay, as usual, we'll start off by taking a look at our Forex Factory calendar here. Excuse me. All right, so on Monday here, not a ton of data. We do have a couple of orange news here, but in terms of the major news, we have business confidence number for New Zealand, and that will have an impact on New Zealand dollar here. Manufacturing PMI numbers and non-manufacturing PMI numbers. So PMI numbers are basically a precursor to retail sales. They're a leading indicator. So those are important. And when Chinese numbers come out, usually we see a response in Australian dollar and New Zealand dollar because those are the biggest trade partners with China. And then coming up, very important here, is a Bank of Japan policy rate and monetary policy statement. So right now, we're not expecting a change in the interest rate. Bank of Japan has negative interest rates, and they've kind of kept it at this level for a period of time, and that is not expected to change anytime soon. However, the commentary can have an impact. So depending on what their comments are in regards to, especially in regards to trade wars and stuff, because Japan is a big exporter. So they will be concerned about trade wars and things like that. So if they think that because of these trade wars and other geopolitical situation that's going on right now, that the forecast for the economy is not so great, that will have a negative impact on Japanese yen. So Japanese yen crosses can go up. But if they start talking about maybe tightening the monetary policy, not raising rates, but just tightening the monetary policy in any way, shape, or form, that will be positive for Japanese yen. And in that case, the Japanese yen crosses can go up. So just keep that in mind. Right now, anytime we have central bank announcements, they are always important because we are kind of on verge of that, or we have already started the process of central banks tightening the monetary policy. That's why these announcements or these events are very, very important. And then, of course, there's press conference. Usually, we get the monetary policy statement, and then there are follow-up questions in the press conference. And we usually see a quick response to the statement, and then prices start to normalize, pull back, and then there is another response when the press conference starts. So keep that in mind. And then on Tuesday here, we have GDP numbers for Canada. That will definitely have an impact on Canadian dollars. And right now we are expecting positive GDP growth. So if the number comes in positive, that will be good for Canadian dollar, and all the Canadian dollar pairs will respond. And other than that, we have consumer confidence number and PMI numbers for the US. Again, important numbers to pay attention to. Employment data for New Zealand dollar will definitely have an impact if it's off. And then Wednesday, PMI numbers out of the Eurozone again here, and out of the US here as well. So this will have an impact on the US dollar. We do have FOMC statement coming up here at 2 p.m. Eastern. So this usually tends to be important, even though we're not expecting an interest rate hike for this one. Usually they do an interest rate hike when there is a press conference after the statement. So right now we're not expecting an interest rate hike. They did that already, and but this year we still have more interest rate hikes to come. So bear that in mind. Right now, from the FOMC statement, one thing to actually kind of think about with this one is we saw President Trump basically kind of rip into the Fed about raising interest rates, and we haven't seen that happened in quite some time. For at least the last 3 presidents have not interfered with the central bank activity. But what President Trump is trying to do right now is keep the US dollar low, and that's good for the exports. So with the fiscal policy that the U.S. has right now, they have an expansionary fiscal policy, which means they're doing tax cuts and things like that, tax reforms in order to pump more money into the businesses so that are allowing the businesses to keep more money. And the idea there is that the businesses will then invest that money and they will hire more people, buy more machinery, and make investments in the business, which will then help the economy grow. So that's the whole point of a fiscal policy, expansionary fiscal policy. Now we are seeing an interesting sort of time where we have contractionary monetary policy and expansionary fiscal policy, and they can work against each other. So that's why we saw, I think it was a couple of weeks ago, where President Trump came out and said that he's not happy with Fed raising rates. And usually, like, the Congress is the one that tends to say things like that. Presidents, for the last 3 presidents, have stayed away from any kind of interference with the Fed, but that may not be the case here. So whether that has an impact on the Fed, how Fed manages things or not, that is yet to be seen. Generally, they are 2 independent bodies, but things do tend to overlap because usually they can influence, or President Trump may be able to influence the Fed. So keep that in mind. And if Fed says anything that the market can take to mean that they're not going to contract monetary policy further, or they may have to wait to raise rates, any of that will then have a negative impact on the US dollar. So stuff like that can have an impact. So that's what we have to pay attention here and make sure that when you're trading. So keep that in mind. Trade balance number for Australian dollar coming up here as well. Trade balance, again, a very, very important number. So if you do see a growth in the trade balance here, that will be positive for Australian dollar. If this one meets the forecast or beats it, that will be positive here. Thursday, we have Bank of England, monetary policy and official bank rate. So here, looks like the market participants are expecting an interest rate hike from Bank of England. So Bank of England has actually not done an interest rate hike in quite some time. And previously, we saw that 3 of the MPC members actually voted for interest rate hikes. So now we are expecting to see 8 of them vote in the favor of interest rate hike, and looks like we are looking for an interest rate hike. So this will be an interesting time for British pound. If they do an interest rate hike, that will be positive for British pound. So very, very important. So this is the first time they're going to be raising rates. And if they do raise rates, there will be a reaction for sure for the British pound, and British pound will go up if they do raise rates. Now, whether that happens or not is to be seen, but that's the expectation. So if they don't raise rates, say they come out and don't raise rates, in that case, there will be a negative reaction from British pound. So that's something that we have to keep in mind as well. So if they raise rates, they'll be positive. So that would be positive for British pound. If they don't raise rates, that would be really negative for British pound. So both of those options are available at this time. And again, when they do an interest rate hike, the commentary about future interest rate hikes is also important. So if they raise interest rates, we'll see a positive impact from that. And when we hear from Bank of England Governor Carney, if he says we are not going to do any further interest rate hikes till 2019 sometime, that can have a negative impact, and we can see British pound give away all the gains. So keep that in mind while you're trading. And then we have retail sales out of Australia Friday. So this week we have a lot of important data coming up. We have several monetary policies here. Okay, so next one coming up here, PMI number, services PMI number for British pound will be important. And then coming up, we have non-farm employment data for the US. Again, that will be an important number and is generally a market moving number. So that again we'll have to keep in mind. So tons of data coming out this week, important week in terms of data. All right, so let's move on to our charts now. Coming up, we have, first of all, I should say, first of all, we have here Euro US dollar. So Euro has been trading in this range for a bit. So this is the range that it's been trading in right now. So that's the high and that's the low. It's right in the middle of the range. It is, we did get a bearish candle close here. And if we were to take a look at it here, we do have a bit of a trend line to the downside. So overall bearish outlook for Euro dollar. And looking for it to drop further. Target will be the bottom of this here at 1.1520 level. So bearish candle close, looking for a follow through for Euro dollar. Pound dollar here, this one, we've seen a very neutral close for the week, and we have monetary policy statement coming out for British pound. So this one can go either way depending on whether that monetary policy is positive or negative. It can have a big impact either way. So if the monetary policy is negative, then we're likely to see a drop, and we could see a drop all the way into the bottom, and actually all the way into the bottom here, and likely even further down. But if that monetary policy is positive, so right now the outlook is bearish. The daily close for Friday was neutral, but from a weekly perspective, we have a pin bar. Outlook is bearish. So I would look for price to go into the bottom of this pin, which is 129.50 level here. So bias is bearish based on the daily close, on the weekly close. But if we were to get monetary policy change, then price could go either way. So if it's positive, if the monetary policy if they raise interest rates, then chances are it can go all the way into 134.80 level here. Or if it's if it's negative, it can go all the way into this 127.60 level, back into the support and resistance level, even potentially lower. So there is it's all up in the air for British pound, depending on how the monetary policy comes up. Right now, the bias is to the downside, and the target would be 129.50 for pound dollar. Aussie dollar here. Aussie dollar has been trading in this range for quite some time. We have all kinds of pins to both sides. So at this point, it's still range bound. And based on the weekly close here, we see pins on both sides, small candle body in the middle, very neutral close for the week. So range bound for this. So the best way to deal with this Australian dollar here would be Aussie dollar, would be potential sell at 0.7480 and potential buy at 0.7300. So price has been trading within that range. So if it comes into the bottom of the range, that would be a buy. Comes into the top of the range, that would be a sell, expecting it to go back into the range. New Zealand dollar here. This one has a very, very neutral close right now. It has been trading in this range as well. And as such, I will look for price to stay in the range. So for this one as well, if price goes into the high of 0.6850, that's a potential sell. If it goes into the bottom here towards 0.6680 level or 6700 level, that would be a potential buy. Very, very neutral close for the week. Price opened and closed at exactly the same price. So this is neutral as well and range bound. Dollar CAD. Dollar CAD has bearish candle close here. Last week we had a nice pin bar, and since then price has dropped, and as such looking for price to move lower. The target for this one would be 1.2950. So back into this previous support resistance area. Bias is bearish for dollar CAD and looking for it to drop further. Euro pound. Sorry, my old charts keep coming back. So let me just get rid of the marked up chart here. Okay. So that's good enough. All right. So with this one's interesting. Last week we had a bullish candle close, but price is sort of in this range. It has been trading in this range here. And we did have a bullish candle close, but it hasn't really gone above the high here. So now we have had a bit of a pullback, and at this point, this is kind of looking a little neutral. It's just sitting, it's sitting up here. The type of move I would anticipate here would be price pushes up, pulls back, and then goes up higher, and potentially higher into this previous support resistance level. So bias is still to the upside, and I'm looking for retest of 0.8980 and then a 0.9050 level. So bias is bullish for euro pound. Euro Swiss franc here, this one is looking bearish and looking for a further drop back into this support level here. 1.1480 level will be the target here. So bias is bearish for Euro Swiss franc. Pound Swiss franc here, again, this will depend on what kind of monetary policy news comes out here, but overall bias is bearish. Last week we had a drop. Now we are seeing a pullback, and again, with this one here as well, I would look for price to drop further. So we've seen this drop, pull back, and I would be looking for a drop again here. And the target is a 1.2750. So bias is bearish. However, if the monetary policy statement comes in positive, chances are this is going higher, and then 1.3500 will be the target level in that case. But right now, based on the technical close, this is looking bearish. Dollar Swiss franc here. This one is also trading in a range. We have seen price go back and forth here. So I'm looking for price to drop further. Even though we have a bit of a pullback here, I'm seeing this as a pullback, not an actual bullish turn of events. So this is the type of move I would look for here. So bias is bearish for dollar Swiss franc, and 0.9780 will be the target to the downside. Pound yen, again, a bearish candle close here. But for all the pound crosses, let's keep in mind the monetary policy statement. However, based on the technicals, I'm looking for price to drop. We have seen a nice bearish engulfing candle close, small bearish follow through, and then looking for a drop. But this week we have both Bank of Japan and Bank of England monetary policy statements coming. So this could, so for pound yen, this could go completely in all kinds of directions. So just keep that in mind. But overall, right now, just based on the technicals, this is looking bearish, and target would be 142.80 level. Euro yen here. Euro yen looking quite bearish. Nice bearish candle close here. And next target will be bearish as well. 127.20 will be the target to the downside. So bearish for Euro yen. And again, for all yen crosses, just like pound crosses, monetary policy will make a difference. But between the two, pound is where we are likely to see more of a basically a response in the market based on the monetary policy. But yen also has monetary policy, so keep that in mind. So for now, for Euro yen, looking bearish. Dollar yen here, this one's looking bearish as well. I would look for price to drop further. 108.80 level will be the next target to the downside. So bearish for dollar yen as well. Aussie yen here, this is looking bearish as well. Next target to the downside will be the bottom of these pins, and that is 80.50 level. So this one is bearish, and again, it's been trading in this range, and we're just looking for price to come into the bottom of the range for Aussie yen. So 80.55 will be the level to look out for. New Zealand yen, this is looking bearish as well. It's been slowly making its way to the downside. And I'm looking for price to drop further here. Okay, so this is where we are, and looking for price to come and basically test the bottom of that pin. So 74.00 will be the target to the downside. But overall, this one has this trend line to the downside here. So I would look for price to drop further into 74.00 level. Okay, last one here, CAD yen. CAD yen, it hasn't really done much. It's just been, for the last 3 weeks, it's been trading in this very, very narrow range. So we saw pin bar here, a bit of a drop, then a pullback again. So this one can go either way. Overall, the current move is more to the upside. It has more bullishness in it. So if it doesn't break this low at 84.20, price could start going upwards here. And then the next target here, well, first target will be the high here at 85.80. And then once we get past that, price is likely to go to 86.80. But if all the other yen crosses start to drop, this can drop further as well. And in that case, I will look for, if price breaks the low here, I will look for price to drop down into 83.00 level. So this one, we'll have to see how this one goes. But right now, it is looking bullish and looking for price to test the high of the pin here. Okay, gold. Let's take a look at gold. Gold is trading in a range right now. Okay, so this is the range. So price, gold has been dropping here for several weeks now. So last week we saw a large pin, and we had talked about how I would look for price to go and test the bottom here once again. But if you take a look at the daily here, so it did that. But if you take a look at the daily, it's been trading in this range. And if you were to look all the way to the left here, we'll see that price was doing that as well. So last couple of times price has traded in this range before it pushed up higher. So with this one, I would look for price to come and test the bottom once again at 11.30. And if it does not break the bottom, I would look for it to go all the way into the high here. And we'll have to see how this plays out. So this is the first option that I would be looking for. Price comes into the bottom. If it does not break the low, I would look for price to drop. But overall bias is still to the downside. And if it breaks the bottom there, then I would look for price to drop further, because there is room still to the bottom right over here to about 1200. So I would look for price to go to about 1200. But the first test, of course, will be 1211. If it doesn't break that, then we could see a move to the upside. But I think there's room to go to 1200. So my bias overall is still bearish, and I'm looking for price to go down into the 1200 level. So let's take a look at oil. Oil right now hasn't really done much. Overall, it's dropped, now pulled back, and we could potentially see another drop. So I would look for price to, so there is this support resistance right here. So it would have to get below that support resistance for us to drop further. But the move that I am looking at here is something like this. So price drops, pulls back, and then drops again. So this is my first scenario that I would look for. So, but if the price goes above the 69.80 level, then it can go all the way into the high, because overall price is still bullish. Like this whole move is still bullish. So overall move is bullish, but within that, we are getting a pullback. And I think the pullback could come down further into this support and resistance area. So for now, I'm just looking for price. If it stays below 69.80, I will look for a drop into 64.00. But if it breaks the high at 69.80, then I would look for price to go all the way into 73.65. So both of those scenarios are still open. Let's have a quick peek at copper here as well. Copper was dropping quite a bit. Now it's pulled back this week. And I'm not, this one's still looking bearish here. So I would look for price to drop into 2.65 level here. Oil has a positive correlation with Canadian dollar. So when oil goes up, Canadian dollar tends to go up as well. And when oil drops, then Canadian dollar will drop. But it's not, but if you go I thought there was something else going on with Canadian dollar this week as well. GDP numbers are coming out for Canadian dollar. Okay, so, but just the correlation is that when oil goes up, Canadian dollar will go up because Canada is a big exporter of oil. So it has a positive correlation with Canadian dollar, which means a negative correlation with dollar CAD. So when oil goes up and Canadian dollar strengthens, dollar CAD will drop. So if you wanted to draw a correlation between oil and dollar CAD, it's a negative correlation. Oil goes up, dollar CAD will drop. So that's the correlation between the two. Now, do keep in mind, Canadian dollar will be impacted by other things like GDP and stuff like that. And of course, there's US dollar in that relationship as well. So if US dollar strengthens, of course, then dollar CAD will go up regardless of what oil is doing. So because it's dollar CAD, so there are a few different things that come into play. But between oil and Canadian dollar, there is positive correlation between the two. So copper, we talked about. Let's take a quick peek at Bitcoin. There we go. Actually, let's take a look at silver while we are at it. Silver looking weak still, neutral close for the week here. So it could go test the high, but overall, I would look for, so I guess the move that we could see for silver doesn't break the high, price drops into the bottom. Overall bias is bearish for silver here. And then this one, BTC daily close is bullish. So this one is looking bullish here. And this one gets impacted because Bitcoin is sort of new. The whole market is new. This gets impacted by news about whether it'll be listed on NASDAQ and stuff like that. So when things are looking positive for it being listed and being recognized more, this will give a boost to Bitcoin. So keep that in mind. But weekly candle close here is bullish. So I will look for price to go up higher. But again, this support resistance level here is important. Price has reacted several times at this level. So I will look for a reaction again. But right now, looking bullish. So 8,600 will be the first target. If it gets past that, then we have a couple of targets to the upside here. Next level to watch out for would be 9150 and then a 9780 level. But first target here at 8,600 and then 9150 for Bitcoin. All right, so any other questions? Okay, not seeing any other questions, so we will wrap it up. You guys have a wonderful trading week. Keep an eye out for especially the UK monetary policy statement. And I will see you guys again next week. Bye for now.